Hello there. I would like to continue what we started last week with Japanese candlestick techniques. Namely, we talked about hammer, or the hammer pattern, and the hanging man. And the starting point today would be from where we left. We discussed the prerequisite of a hammer and a hanging man, this being the hammer, this being the hanging man. And we used the example, if you remember, it was right before the non-farm payrolls release in the United States. And we said that Japanese candlesticks are reversal patterns, most of them. I mean, there are a few continuation patterns, but they also can form a reversal one. So as a reversal pattern, when it appears at the end of a bullish trend, you look for market to retrace a bit in the case of a hammer, enter on a 50% retracement, 61.8 retracement. That would be a perfect place to go and trade your binary option, and then simply adjust the expiration date with the time frame that you have. In our case, it was the 4-hour chart. So the options on a 50% retracement and 61.8 retracement on the euro US dollar, the put options proved to be winning ones if you traded end of day. If you traded with 1 week expiration because it was a Friday, there's still a very good chance for this week on tomorrow the put option to expire in the money as well. And maybe even if you traded end of month expiration, they have a good chance to expire in the money, because remember, these Japanese candlestick techniques are a reversal patterns. Now, this was the case on the hammer and hanging man, but it is time to move on an even more powerful pattern, still a reversal pattern. This is called a star, and there are two types of stars. Let me use the same euro US dollar example. This one we go backwards, and these are two stars that formed on this currency pair. I would like to explain first what a star is. A star is a group of three candles. We don't have one candle like it was the case with the hammer, but we have three candles. The first candle, so definitely we need to have a bullish trend, let's say. And then the first candle that the market forms is one that goes in the direction of that trend. So if the trend is bullish, this candle here will have a strong bullish body. It's called, so this body here would be a green body. Then the market forms with the next candle. It forms a very small candle in the middle. This one. This body here is key to interpreting the morning or the evening star. It's a very small candle with a very small body. And then the next candle that follows shows reversal. Remember, these are reversal patterns. So we show a reversal. It shows a reversal in the opposite direction, and the body of this candle is similar to the first one, maybe even more aggressive. The rule goes that the body of the second candle should be 50% of the first one at least, but I would say that it is working best when it is at least 100% when compared with the first candle. Anyways, we have a bullish trend. Then the first candle here is a green one in the direction of the strong trend. Then we have a very small candle in the middle, and then a candle that the next candle that follows is a reversal one. This is called a morning star. An evening star, sorry, not a morning, an evening star. Why an evening star? It is a bearish pattern. It forms at the end of a bullish trend, evening star. So bearish pattern. So this is an evening star, a group of three candles. The opposite, of course, is true when the market forms a morning star. You need to have a bearish trend, like it was the case here, and then you have a group of three candles. So let's go here. We have what? We have a bearish trend. Then we have a group of three candles. The first candle respects the same rules like in an evening star, only that the body is a strong red bearish body. Then you have a very small candle in the middle. This one holds the key for interpretation. You'll find out a bit later why. Holds the key for everything that follows. And then a candle in the opposite direction, a bullish one, that ideally will have a body minimum 100% of the first candle. So this one here would be a green candle. This is called a morning star. It's bullish. It calls for call options. Morning star. Now, as you can see, I choose these two examples just so you know that trading is not perfect. And I choose these two examples because one of them fails, and most of or it almost fails, but most of the situations happen like this. Why they fail? The key comes from the candle in the middle. This one here, let's try to mark it. This one is key for the whole pattern. Why? It should be either a hammer, so we touched the hammer and the hanging man on the previous video analysis. Either a hammer, or it should be a doji. What does it mean, a doji candle? We will cover the doji candles later in this part of dedicated to Japanese candlestick techniques. But a doji candle shows reversal patterns, or at least hesitation. It has a very small body. You might say, okay, this is a hammer here. This is not a hammer. If you remember, the body of the hammer needs to go 3 times into the shadow. It doesn't go 3 times. So why it looks like a hammer? I mean, it looks like a dog, but actually it's a duck. So it's not really good for a reversal pattern. But here, if you look at it, the body of the candle in the middle here is an almost invisible small line, showing that the opening and the closing prices were almost identical. That's a doji candle. There are many types of doji candles, but this one here shows reversals. And then the market starts to move lower. That's the very nice place to go and buy put options. And then, of course, we had to put the expiration date according to the time frame. This time frame is 4 hours chart, so according to this time frame, we should interpret the put options. In this case here, because this is not really a hammer nor a doji, then the market indeed moves higher, so the call option here will still have a very good chance to expire in the money depending on your expiration date. But then the market still tries to get the lows here. Now we don't trade forex here, but on a binary option you may end up here. You may still have a very good chance here, like this, that the market will come. If your option expires here, then you are toasted. Other than that, the reversal pattern worked really nice, and this is the difference between morning and an evening star. Morning star appears at the end of a bearish trend, evening star at the end of a bullish trend. Hope this helps. Thank you for being here. Keep in touch. Bye bye.